Good morning, everyone. I hope you're well. I've not long been up, to be honest, but I'm in the groove. I've had a quick check of the markets, and we're going to try and do some live trading into the open, the cash open for the DAX and the FTSE and the European markets, London markets, Frankfurt, Paris is all in about half an hour's time at 8 o'clock local time here in London, 7 o'clock Frankfurt, 6 o'clock in server time in East European Standard Time, summertime. So, what happened yesterday? Well, after our, you can see here the 1 o'clock candle, big old rally yesterday. Quite subdued inflation data. The core was a bit hotter than expected, but really overall, it was sort of in line with expectations. If I just get if I just open the calendar, just bear with me a second. Um, from yesterday, you can see there's not a lot going on today, which is why we're doing this live trading event at the beginning of the European session today. So if I just put the filters on, because I'll far too much guff otherwise. Actually. So yesterday, Tuesday, we had this CPI data from the US. It's really the core number and the headline number, it's like the major movers of the week. It's the major news event of the week, as we said yesterday. Excuse me, I've just had a very small sip of coffee. Got a massive cup with me this morning. So the monthly number was in line with expectations. The core at 0.3 of 1%. It came in at 322, so it's been rounded down to 0.3%. But that was enough to take the annualized number up to 3.1%. So that was a bit of a surprise when the data dropped yesterday from 2.9%. It was expected to go up, but it's gone up a little bit over the 3% threshold. Remember, the Fed's target is 2%. Most central banks have their target for both the headline and the core around about 3%. The headline number, though, remained in line at 2.7%, so it didn't go up. That's what the White House in particular has grabbed onto. And Kevin Hassett yesterday, one of the shortlisted potential client candidates for the new Fed chairmanship, was grinning more than normal yesterday on that inflation data. So it's been benign, and we've seen this rally in the stock markets. The S&P 500 and the mighty Nasdaq both closed at all-time highs yesterday. Over in Asia this morning, the Nikkei is through and holding 43,000, I should say. Sorry, we went through that yesterday, and we've held it this morning. We've moved higher in the Japan trading day. It's just coming to an end in the next hour or so, but the Nikkei is higher as well. So just go back to the US close. So the markets are up over 1%. The best performing as ever was the Nasdaq, up 1.4% into 296 points. The Dow was up 483 points, 1.1%, and as usual, the S&P split the difference with 1.13% improvement, up 72 points at an all-time closing high of 6,445. And this morning, the derivative market here on our platform here isn't much higher than that. It's at 6,446, but you can see the rally we got on the 1 o'clock candle following the non-farm payroll this morning. So the hourly remains bid here. The 4 hour remains very nicely bid as well, over its 20, 50, 25 and 9 moving averages. And the daily has returned to the upside as well. Oops, daily's not updating now. Strong day yesterday following the key event of the week. So can we hold this 6,400 level is what market participants will be looking for from that dip under the 20-day moving average following the surprise of non-farm payroll on the 1st. We've rallied since. Big bounce back on the Monday, follow through this Monday, and again yesterday. Wednesday was a good day to the upside. Sorry, Tuesday, not Wednesday. Fridays and Tuesdays. Excuse me, I'm really need some more of this coffee, so just bear with me one second. Oh. It's filter coffee, but it's in a bag, so it's nice and simple. So you just boil a kettle, let the kettle cool down a wee bit. Don't want boiling water in it, and put it on like making a tea, like making tea with tea bags. But these are coffee bags, and it's filled. It's just from Taylor's of Harrogate. Thoroughly recommend it if you haven't done it. You know, it's nice and simple, just like we do with tea bags. This is coffee bags. It's absolutely delicious. Anyway, enough of my advert for Taylor's of Harrogate. Stocks remain bid. What does that mean? Well, the dollar remains under pressure. Let's have a look at quick crosses. Obviously, yesterday we had the Australian central bank, the RBA, cutting rates by 25 basis points as the market anticipated. But again, another up day yesterday on the back of the inflation. We had a bit of volatility, obviously, as the numbers came out, and as the drill this down to the hourly chart, the Aussie, as the this was the inflation, and this was the announcement earlier on. Sorry, this was the announcement earlier on in the day. We went down, dollar picked up a bit under the key 65 handle yesterday. Went as low as 64.80 zone yesterday before recovering very strongly in the American session, the US session, up through the 20-day here on the completion of the hourly candle from being quite significantly short to long, and then the volatility of the data later, and then we lifted, and then we're through 65.40 this morning, which is a higher time frame fib level. Obviously, those lines. Let's have a quick look. That's looking quite interesting at the moment. What was? Oh, right. So this high we got here on the 7th, we've got to as well. So pushing higher here. I'm not sure what's that. Was that? It must have been on a shorter time frame. I think we were looking to retrace. Oh, right, sorry, we were looking at the retrace on the sorry, it's the daily. Yeah, on the RBA and the inflation data yesterday, but we've moved to the test this high from the 7th here for the Aussie. So the Aussie has bounced back quite significant. I think we got an open short position on the Aussie. No, have we? No, it's the Euro, CAD, and Swissy. The Aussies were long. Aussie yen, Aussie CAD is doing really well. They're the only open positions we got. Sorry, I've handwritten it down here to the left of me. So yeah, dollar continues to be weakened basically. So that's the Aussie, the CAD similar pattern. Back to test 139 yesterday. 138 yesterday from the support we found on the 20-day moving average. Swissy back over .80. Down day for the dollar yesterday, and back through 81. Minor rally we'd seen in the dollar. So I'm not sure where we are with that one. I think we might have. That's out of the money, isn't it? I might close that one. Also, might have already been stopped out the long dollar Swiss position. Dollar yen 147.75 this morning. Again, the rally sort of petered out, turned yesterday with quite a long wick up to 148.50, but we're back down again, so back flat. The negativity out of both governments with regard the forex, regard the FX policy is continuing to sort of weigh on this pair. So 147 remains our support. Below that is the 50-day moving average at 146.35, and as I say, 147.50 is 148.50 has been the upside target top this week, but the daily candles haven't closed much above 148. So 148 remains the upside target today as well, which we've already spiked into this morning. I must get up earlier, I think, if I'm going to do these early sessions and be a bit more with it. Sorry, apologies for not being my usual ebullient self this morning. Kiwi 1.5970, so a bit like the Aussie, continuing to recover from these lows below 59, so 59.70. Initial break of the 20-day moving average was here on the 7th. We went sideways for a couple of days. Looked like we were going to go short. In fact, I was short, wasn't I? We hit the target yesterday. And that stop loss isn't there. Stop loss is the other way around. We were short this, weren't we? Aussie, were we short Aussie? Kiwi? Oh, there's so much stuff open. No, I don't think that's actually open, is it? I thought I'm sure there was a Kiwi trade. Oh, Kiwi CAD. We were long. Perhaps this one isn't open. No, the only dollar trades were the euro, the CAD, and the Swissy. So anyway, it's just updating these charts from our trading platform. So I'm not sure if that's. Hang on a minute. There's a long there on the 6th. It's saying there's the target hit. Oh, hang on a minute. That can't be right. Oh, something's wrong here. I have to check the data what we did. But anyway, we breached the 20 and now we're back over it today. So this is looking quite positive for a potential long position tonight for the Kiwi against the dollar. Euro 116.89 at the moment. Again, that's cool. That move we've been talking about the move into the. Let's make that a bit bigger. The move into the. Oh, hang on a minute. That's no good. That's in the way, isn't it? Can't see that because of. Let's change the view. Oh, that's no good either. There, can you see that? Right, this is the euro, guys. Let's see if I make me a bit smaller again. There we are. You can see that now. So the move up into the test of the 20-day moving average this week has held. So again, another strong day yesterday, and here we are. We went to 117 yesterday and declined, and now we're back up today. We closed at the top end of this range. Strong candle yesterday, like we had here on the 6th and the 1st, to the upside. So the green candles are much bigger than the red candle since this big down leg. So we need to wipe out all of that down leg. As you can see, the extension to this leg here takes us up to here to 120. So 120 is still potentially in play. We came down to test the fib range, the 50 and the 61. So those are the support here, which we rallied off on the 6th. Minor decline for a couple of days, and then we're back up, and we've closed higher yesterday. That's a significant thing. We closed higher yesterday than we had over the last 3 days to the upside. That sounds like the local Metropolitan Police, or it might indeed be the London Air Ambulance just going over. I don't know if the microphone's picked that up. But anyway, euro positive yesterday, positive this morning, eyeing 117. That looks like we might get tested. I say there's not a great deal of data today to move that. We've got German and Spanish inflation data, and that's, again, come in line this morning. An hour ago, the Spanish numbers dropping. Spain recovering very strongly, quite a significant player now, the 5th biggest economy in the eurozone area after the 4th biggest economy in the eurozone area after the Italians, Germans, and the French. So recovering very strongly, or relatively strongly, the Spanish market. I say not a lot of data, not a lot of news to move the markets today. Bostock speaks later on, a bit of I had been a centrist on the Fed, but all now looking for a chatting about a September cut. More on that in a minute. On the politics of what's going on, we'll have a look at the stock market. So euro up as well. And finally, sterling 135.15 this morning through the key 135. We went a bit stronger than the euro's test of its key level. 135 is a hugely psychological number for the Brits, or for sterling traders. And again, we've recovered from this, the range we were talking about at the end of July, as we tracked it down and traded it into the 132 area. We've done exactly the reverse. We've reversed off that. So it's a very sort of unusually standard step down and step back up here from 132 back to 135. And we're over 135 this morning. That's what a lot of traders will be noticing this morning as they got to their desks. Sterling bid, and currently just edging over its 50-day moving average. You can see the green line here. This is the 50-day moving average. We're smack bang into 135. So we're the bulls are testing. Have we got any more momentum here? Have we swept up any sort of stops that were up here at the 135 level? Certainly some that have been holding this from 132 would have had an initial 300-point target around 135. Obviously, some had it here at the 20-day. By the looks of things, we had that strong day on the 7th. Strong day yesterday, thanks to the benign inflation numbers from the US. and continuing week in week data out of the UK as well. It's getting a bit of a worry, the earnings numbers yesterday. But 135 is breached this morning. Sorry, talking into my, oh, the smell. If you could smell that, guys. Can you smell it there? That is just delicious. If you're watching, just have a sniff of that coffee. This should be smelly vision, really. That is just, oh, that doesn't get you going in the morning. I don't know what will. So, all of you coffee aficionados out there, I hope you're having a great morning or evening or wherever, afternoon or wherever you are. If you're in Asia, it's obviously afternoon. So go and get yourself an afternoon coffee. It's lovely. Right, so there we go. So stocks higher, dollar weaker. Let's have a look what the we're doing on the DAX this morning. So daily on the DAX, we are long. We are over the 50-day. We've edged over the 20-day. We're now back in sync, positive. But the dip down, it hasn't actually crossed, but we're still flat. We're still in a range. Nothing to get too excited about. Not a great day yesterday, and we're moving a tad today. So as far as trying to trade the open on the DAX, we may be looking for long positions, but let's have a look how we go down. So let's step down the time frames. There's the 4 hour, absolutely benign, not doing anything. So again, a drift down yesterday morning into the 50 period, and then moved up waiting for the inflation data. Inflation data came here during this 3 o'clock candle. In fact, it was here, wasn't it, during the 11 o'clock, 3 o'clock handover, and it's moved higher. You can see we're right in a bit of a flat area. We're testing yesterday's high at the moment, or we had been. We've tested lower. This is interesting. So far today, we've tested quite significantly lower on the inflation data. That's, where are we? On the inflation data that came out in line with expectations. So that is out of the way now. And again, remember what Wicks shows. Wicks are showing weakness. So this will be interesting on the shorter time frame. Remember, this came out at 6 o'clock, so it's got down to the next line time frame. There's the 6. This is the 7 o'clock candle, so the 6 o'clock data was included in that. So we're down. We rejected. This would have been long there at 6 o'clock last night. You would have added, or I would have added my system, if it was trading this on this hourly time frame, would have added there at 8 o'clock. Stop loss would have initially been down here on the first entry. The second entry would have been a bit tighter down around here. So we're still long on those two positions. It's dipped and dipped. And that's, we could have, the first stop losses could be now back here because that's been rejected. I might have pulled it a bit tighter. The second one would be round about here. So this is long on the hourly time frame. So if we're going to trade this and the shorter time frame, just remember that the daily, the 4 hour, and the 1 hour are long. Okay, so and you want to mark in. So if you just mark in the hourly, let's put a line on here, make it a different color. What am I doing? Brain's not working this morning. What I'm trying to do, I need some indicators. Where's my indicators gone? Zoom out. Oh dear God, my brain's not working. There we are. I don't want that. There we are. Oh, come along, Uncle Stuart. Let's get your brain into gear this morning. Right, let's horizontal ray. So that's our that's our data low of the morning, shall we say. Let's make that a different color than the purple. So make that bright yellow. Can you see that? You can't see that yellow, can you? Let's make that blue. It's not a great color either, is it? On the background, let's make it actually, let's make it black for a change. So the black lines are low pre-market open, 24,070. There's the 24,000 round number itself. In fact, let's put that down to 24,000. That's the 24,000 level we went through yesterday. Let's make that a big, thick purple line. Make it dash. Make it 2 so we can see it. So there's 24,000. The big fat purple line. That's our low pre-market. That's our high pre-market as well. Let's put that one in. So we're looking to be long. Remember, the higher time frames are long. We don't want that. Bear with me. It was black, wasn't it? So that our range pre-market then for the DAX here is 24,179. Our low is 24,070. So let's drill down and see what opportunities await us. So on lots of our different platforms. Obviously, unfortunately, I can't copy these lines across the different setups, but and this isn't the ideal one for trading the open. But let's just go down to the 5-minute chart. Remember, we ideally looking to be long. So there we go. There's the low. So the 5-minute trader here would have triggered long here on this strategy there. So we're long from and it's immediately retraced. So we were long from 24 143. So 143.97 we've gone long. Pitched up for the first candle and then giving it all back. So that's not great. That's not looking positive. So we had to close that out on that immediate retrace because we're back under the yellow line. Remember what the rules are for trading this strategy. We wait for a cross of the 5. This is the 5, the 9, and the 21 exponential moving averages. We wait initially for a cross of the 5 here coming above the the 9 coming up, these two crossing. So that's happened here. In fact, I don't know whether it happened there, but it doesn't matter anyway. Also in the same 5 minutes here at 7:35, we also crossed and above the candle, positive candle again, close EMA. Stopped at the 50. We don't use the 50 on here. It's just for the higher time frames. So we'd have gone long there. Our stop loss initially would be down here because that's the turn in the market. We wouldn't have had to go all the way down there, but you can see that turn there. That's our stop loss there. So it's a big risk reward, and that's a big risk for a little reward because we were looking to perhaps get to the high of the day again. That hasn't happened, so we're out. Okay, we accept our losers. So we got in here. We're out here at 7:50, and now we're just waiting. So let's have a look if there's anything else. Any other strategy gives us a better entry. So that one's not worked. Oops, didn't need to do that. Cancel. Let's look at our other strategies. So, or let's have a look if there's anything else going on. UK FTSE, if that's a bit more. There we go. FTSE has worked out more positively. So the FTSE is long. And it's holding, unlike the DAX. And is that the spread on our FTSE? Oh, dear me, that's a bit. Oh, no, it's only 1 point. So we're long the FTSE, and that's still in position. So we'd have got long here. There. Oops, let's put that in. That was on the right. So that's long. Guys, if there's anything else you want to, is anybody here, Christian, would you long DAX right now looking bullish? Yeah, well, sorry, Christian, you've again depending on. Hopefully, I've just explained it. What did you ask that question? 53. Yeah. So I'm still long the FTSE, and if I'd missed that at 45, I'd have, we should be getting it now because there's a gap here. But remember, this is pre-market open. Okay, so this could be the players moving the derivatives markets before the cash markets open, before the actual trades of the day land. So we were looking certainly for the FTSE here on the 5-minute time frame. We're looking for to get at least to the. Oh, come on. Oh, I'm usually really good in the morning, but I think I got up a bit too late to come here. So I mean, get it earlier. Well, good morning. Anything you want to, any particular asset you want to have a look at? It's gold or Bitcoin. We do the same thing. What we're doing here is just trading the pre-market open for the cash session in Europe. So cash session opens in 3 minutes. So we've bid this. It looks like, and watch the volumes kicking as well. Let me just add the volumes, a little volume indicator to the bottom of the chart here, and watch. This is what you should be doing if you can't spell volumes, you fool. Volume, numpty. I just put simple volume histogram on the bottom. Watch these. Well, we should see. This is on the US. On the German data, the DAX data. So we have highs. This was the. It's an interesting one. That's an interesting. I wonder why that is like that. That's always one to view. Remember, these are only 5-minute candles, but so that was long. Our stop loss, I say, was initially down here. I would have pulled it up to here. This isn't looking great either. Like the DAX turned against us, but we're still holding the 20. We haven't crossed under it yet. Here we are. Here's the open. And that's looking like that may have stopped. Yeah, if we'd been strict with our stop loss. In fact, our stop loss is still here. I've got in here. Let's just do this while we're doing it. So My stop loss would be there, and I'm looking to get there. So you can see it's a bit over 1-to-1, the risk reward. It's not great, but it's 5-minute candles. It's scalping the open. The trend, the higher time frame is long, so we're with that as well. But we're shaking out, so we can easily. It's unlikely we'll get shaken in this immediate opening salvo of trades. Remember the other thing, guys. It's the middle of the week. It's the middle of August. It's really quiet. The volumes are low, so the desks are quite quiet. But you can still get you still get opportunities. And as I said at the beginning of the month, August has a bad rap, a bit like September, and it's not as bad as history shows us. It's not as bad as everybody talks about. But Christian, yeah, I'll come to gold in a minute, my friend. If you're looking gold, so that's that. Well, it hasn't taken us out yet, but anyway, let's just leave that. DAX had closed us out, but DAX has now gone short, guys. DAX is short. Volume. Look at that, very low volume before. So we might be getting played here, but let's just follow the rules and take them. So we've lost a DAX trade. That's short now, and that's our stop loss up here now for the DAX. But let's now wait and see what happens for the open on those stock markets. Gold, I was going to look at some other examples, wasn't I? Gold is bullish. Yeah, Christian, you're absolutely right. Gold is running, and that would have ran here from 7 o'clock, having been short quite strongly here. Interesting turnaround there. That's really quite of interest there on quite a big volume, then low volume, but bigger volume here as we've rallied high. So that's gold getting shaken out. There we are. You can see what's happened. We've gone through that 3347 area we talked about yesterday, and we've gone presumably to 3345. Yeah, 3343 this morning. So that's our low for gold this morning. Down here. Sorry, let's just do this as well. So it's obviously pre-markets. This is the derivative market, but remember the bullion market in London is opening later as well. So 3343.40 was the low in the Asian session. The Asian high has been breached this morning already. You can see this where this line was. Again, this is a line I'd already had in here at 3353. So that comes from something from yesterday. So that's positive. But as far as technically trading, that was short and then it got stopped out. So that was actually stopped there. You can see we've got a big candle down. It would have triggered short here. It reversed really quickly back through the middle moving average there so we'd have been out there. Ridwan, yes, what we've got here, this is a trend following strategy, the crossing exponential moving average, it's called here. The EMA cross. So the red, ignore the green line for now. The red line is the higher one. You can see what that is. So this is the 21 exponential moving average. So it's a moving average, and the length, how many candles it counts, is 21. So it's 21 candles. And you can ignore a lot of these other things, but that's the key one, the 21 moving average. Okay, so that's the red line. You see the pink line. Okay. So that's our higher moving average, if you like. That's our slowest moving. The next one, the green one, is our. Let me to do that. Let me to do it on there. It's done the cross thing. Oh, come on. Oh, anyway, let's it's got them both on here. So the orange one is the 5-period moving average, the 5-period, and the 9-period moving average is the green. So we got 21 is red. Green is our middle one, our medium moving average, 9-period. So it's only counting 9 candles. And the faster moving one is the 5-period. So the 5-period only counts 5 candles back to give you the average price over the last 5 candles. The red one counts 21 candles back to give you the average price over the last 21 candles. So obviously the 5 is closer to the actual price action. Obviously, and if this was 3, it'd be even closer to the price action. Okay, so you can see here there's a trend. So we're looking for a move. We're looking for these lines. Rapunda, where are you? Here. Just answering this question here, guys. to be aligned, i.e. in order. So 21, if we're going long, we want 21.95. If we're going short, we want it the other way around, like we had here. So we got 21.95. Here we've got 21.95. So this was going down. This one's going up. Obviously, when it's going sideways, when the price action is going between them and the moving average is flat, you stay out. You want to be stayed out. You stay out of the market. So you want a big candle to trigger it off, like we'd had here, or we'd had here. That looked like that was going to go short. It didn't actually happen. And then we go here. So the rules are: once they've crossed, once you cross the orange and the green have crossed, and then the price action, the candle's got to close above or below the red one, the 21. So that's here on gold. That would have triggered a long position here. It's not black. Yeah, it's about that. So that's gone long this morning there at 7 o'clock at 3,351. Our stop loss initially would have been sort of a long way down. I mean, ideally at the turn of the market, which is all the way down there. So from 351 to 345. So it's a $6 loss. Stop. It looks massive, but you can see we've already rallied that way. Okay. So what's happening now? Well, that's confirmed. So we'll have moved our stop loss up. And our stop loss now, my stop loss, if I got risk on the market, would be round about there, the 353.22, which I'd already marked on from a previous session for some reason, so it's still in play. So I wouldn't have got it quite that close because it's only the 5-minute chart. I would have had it here. It's still here because we've gone up, but then we've come down. If I'm being aggressive, my stop loss now would be round about here, just to lock in profits, because the rules of the system is, and it's looking like it's going to do that right now as we speak, is that once the price moves up and then comes back down and closes below the medium moving average, the 9-period moving average, we get out. So this looks like this is going to close out anyway. But alternatively, if I dragged my stop loss up, it would have been here. But if I'd been trading, if it's been real, my stop loss was probably still down here at 353. But the automated system, when we code this, it's really easy to code this, would be getting out there. So we'd have got in here at 351. 350. I'm going to say 3,000. 351. 58, and we'll be getting out here at 345.40. So we've made $3 on that move here before 8 o'clock on the open. Okay, so it's the opening salvo of the European session as well as what's going on. So interesting, you can see it's not quite closed yet, and it looks like it might not close below the 9 periods. So we make a decision on that. But I say my stop loss would still be round about this sort of level. See how this candle closes out. We'll come back to that as well. Let's have a look at how the actual stock markets have opened, because it's now 6 minutes past 8, and here in London, and how our derivative markets have reacted to the cash open. You see a much bigger volume. There we go. So I can't remember what we were doing here. This is the DAX. We were long, weren't we? Then we were short, and that's not worked out either. We've been taken out on that. That's the issue about trading pre-open. What we have done, though, what have we done? Somebody tell me. What have we done on the DAX open? What's happened? What's of note on the opening action of the DAX? And look how big the volume candle is on the compared to what's going on before. So these are all real trades that are being placed by real players in the real exchange, the Frankfurt exchange of that. So Christian, if you're still here, Randall, tell me what's happened. What's of note on the opening first 10 minutes of the German market today? What have we done? Come on, somebody talk to me for a change. I mean, nobody want to talk to me. Okay, well, that's a bit delayed, I suppose. Christian, I was just, I wouldn't want to short it. I was going long. That was long, but I got turned out. I was just demonstrating the strategy. It would have triggered a very weak short position there at 750. I wouldn't have taken it simply because it's pre-market. I'd wait till the noise of the pre-market has happened. And remember, if you've got a standard account, guys, with us, if we got the 2-minute time frame, if you've only got a standard account, the rules say, stay out of the market in the furore of the opening move. So there's the 8 o'clock candle. So you don't want to be trading, or you shouldn't be trading around a 4-minute window around the open. So that's the this. We're down to the 2-minute candle now. So that's the 4 minutes. So that window, you don't want to be trading, or you're not allowed to be taking trades. This red line here, okay, the 4 minutes around. So here the 2-minute chart was short, then it went long, then it went short, which again didn't play out. But again, whether you're going to be trading that so close to the open, I don't know. So the opening, what I was saying earlier, guys, was the opening salvo of trades have tested the pre-market high, haven't we? Here at 5 o'clock this morning, in the very, very early European trades, there would be some European traders around here at 6 o'clock, 5:30 time. We've been tracking higher in the late Asian session, but very little volume. You can see here. See how the volume massively picks up on the open. So that was the high. Again, what's happened, what we're seeing here, is a test of the pre-market high, and it's been rejected here in these first few, the first 10 minutes of open. Okay, so remember the higher time frames, the hourly, the 4 hour, the daily, all remain long for the DAX, but quite weak. The big volume on the opening trades is starting to cool, but it's still significantly more than it was here in the sort of early hours pre-market. Remember, these are only 2-minute candles. So it's still relatively bid, okay? Although it hasn't got a direction and it's rejected the opening high. These first, where are we? Still only 10 minutes into the open. We're still relatively bid. So the first 5-minute candle we've completed. The 10-minute candle is just completed now. Many traders, professional traders at banks and institutions trade these timeframes, the 5 and the 10-minute timeframes as well. So they'll be making their decisions on that. What we can see here from the 2-minute time frame is that the 50 period moving average is sort of held. So that's our support area just initially before the mark. So any lows of the opening session need to breach 24,134. See what I've done there? This is the rally, then we dip. So the initial opening phase, if you're only going to trade this for the next 30 minutes, that's your stop loss area. So again, we are still somewhat biased to the upside. We haven't breached under pre the open here. What's that? Pre the open and into this now 5 minutes, 10 minutes into the opening session. We haven't breached the 20 period moving average, or indeed the 50 period moving average. And again, minor technicality there on open. The 20 from being flat moved up through the 50, so that's relatively positive. So this would be positive, if anything. There's nothing to say take a long. Well, there is actually. There's it's triggered, it's crossed and gone long there. So again, if you've got a pro account, you would have gone long. That would have triggered long right on the open at 25,145. So the DAX with a pro account is still long. With the stop loss down, quite a tight stop loss there, down there at 24,133. It's gone long at 24,145 here on this 2-minute chart. Even though, again, you might have had, because you're only trading 2 minutes, you might have had the pre-market open, pre-market high as a target, so you'd have been out, and that's probably what's happened there. We've gone long to that, out, it's been rejected, but now we've got buyers back in again here. And the volume cooled down, but now it's ticked up here in that 8-10 candle, which again isn't unusual because of what I said about professionals trade the 5-minute and 10-minute time frame as well. So the pre-market high was breached briefly. I actually went over it there. You can see on the 2-minute candle, went actually higher to that to 24,183. So that's still looking quite positive. Okay, so. If we go back to gold, that was so we're now long there on that 2-minute time frame. The FTSE went long and on the 5-minute, didn't it? There we are. The FTSE's still long. I can't remember what these were. These when we got it was 5 minutes, wasn't it? We were using on the FTSE. Let's go back to so we get our parameters. So there we are. We're long there. In fact, that would have taken us out, but we would have got back in there because again, see what's happened there. We've crossed, and then that 5-minute candle there. at 55. Again, I wouldn't have taken that really because it's ahead of the market. But and then the volatility there. See the volatility of the open. If I had my stop loss here, it would have taken us out anyway. But that's a positive 5-minute candle, so that was positive. That rejection down here at 55 is being bought. So that would have bought long there at 9171.70, and it's continuing to go long. So so from a long that was stopped out to another long there at 71. And again, the pre-market high here at 640 has been taken out very significantly here for the FTSE. So although you can see the spread looks a bit wide there on the FTSE, it's only 1 point because we're down at 5-minute time frames. It exaggerates it. That's long, and you're very much in the money on the FTSE. So that's playing out nicely. The DAX is not playing. Might join it here on the 5-minute. Look at the volatility on the 5-minute there, up, down, and then back up. So this is long. I'm buying this on that. So we're long DAX, long FTSE, and presumably the equity markets. The forex markets are doing the opposite. The dollar being weakened. So there we go, my friends. Let's go back to gold. You were asking about gold. I can't remember how we left gold. Gold on the 5. Where's gold gone? Gold on the 5-minute. Yeah. So again, long. See, an hour before. Obviously, gold is less impacted than the DAX and the FTSE with regard to cash open, but that is just a really nice trending market. So gold is long, my friends. Don't be afraid to buy it up here. I know a lot of you will be because it looks really, oh, look at that, it's overstretched. And here on the 5-minute time frame, it's looking relatively stretched. But see, the RSI is still 65, so we're still not into the overbought zone. The MACD signal line here, the blue and the yellow, the signal line and the MACD line, nicely trending positive again. Ridwando, if I'm talking just gibberish or it sounds like gibberish, watch our training videos that are on the website about how to use all these strategies and how to trade these indicators as well. So get on our website and follow those and follow some of my recorded videos. So if you go to the website, let's go back to the here. There's all sorts of stuff. So on the tutorials are really good as well. There's some just how to get started, basically, how to use the Trade Locker. This is direct from Trade Locker. These tutorials. Their blog is obviously our thoughts. Heikin Ashi, Fibonacci, in some indicators we've written a while ago. This is a really good article as well. It's the comparing static and trailing drawdown, the difference between the two and the benefits. And there's a little video in there as well. We've just done a little August update as well. Some big news coming next month. Can't say anything else about that, but have a read of that as well. And Trading 101 is basics of getting started again. Things about Bollinger Bands, the MACD, which we just talked about, the ADX. We don't talk about that much, but Bollinger Bands we have one of our system Fibonacci indicators. So have a look on here. And then on our like YouTube sites, where are we? All our live videos are there. So this is me. This is us now, and these are all the videos we've put up, and these are all our past live streams. So you can see I do one every day about sorts of different things. Obviously, non-farm payrolls. Get to see my ugly mug. Too often, I guess, but there's lots and lots of these. We do this every day. So scalping with a VWAP, these are normally news related ones, but there's lots of training ones on here as well, similarly on our X platform. So have a look there, my friend, and the best of British luck. So gold is playing out really nicely for us. Under the 5, tested the 9 there. That was looking a bit twitchy, wasn't it, when we got to 57, but we're still long. Stop loss now, if that's where we'd got in. We remember I said we had a stop loss there because that was significant from before. This is my next this market line, 35, 57, 18. Stop loss is a bit obviously too close for that. Looking at this market, looking at the candle formation, see how we stalled there at 356.30. So my stop and that wick came into. So I have my stop loss here just below. In fact, I might even be a bit more cautious and just there at 355.41. See how this candle continues to go. It's going to stall and turn at the moment, but at the moment we're nicely in the money from 7 o'clock here, and we're still trailing this long. See what I mean about, trends can go on and on and on. Even when you're trading these short time frames, you don't need to be in and out. You don't need to be scalping every 30 seconds and grabbing every moment, because these wicks, can really whip you out. And here you can see what's going on at the moment as I speak. You can see a relatively big volumed candle on the previous one, less volume on this current candle, which is still got a minute to run. But you can see a rejection of lower, a rejection of the a rejection of the 9-period EMA. So this is although it's stalling, we got a doji, a small-bodied candle, and it may be the last of the buyers here in the 20 minutes after 8 o'clock. May not be as well. So we don't care, do we? What we do care about is locking in our profits. So we've got in here at 351. My stop loss, I say, is now, I'd probably have it, that's probably a bit too close, would be here at 345.76. And again, see the candle pattern is coinciding with the 21 EMA. So if this continues to move up for a candle or two, I might lock in some more profits. So we're at least $3 or $4 or $3 at least in up on a gold trade this morning, and there's $3 is an awful lot of pips, my friends, isn't it? So don't be afraid to do that. So there, we finished positive. So just interpreting that candle, we got a big long wick. The body is quite small, but we've rejected the lower price. We rejected this moving long. That might have triggered, more people to enter on the basis of this strong candle. So certainly, my stop loss now is elevated on the completion of that candle to 355.28. So that's where our stop loss is, and we've locked in this profit from this line here. Let me just change the line setup, so because there's lots of other lines already on here and they're all dots as well. But let's change it to a dotted line. So that was our entry here at 351. Our stop loss now is here, and we're good to go. So we can just walk away. Let's just put that in now, and knowing that we've locked in profits, other than a big sort of spread variation, a big slippage. We've locked in this $4 here from 351.45 to 355.35. Now then, let me just do a quick ATR. So what is the ATR? Do you remember what the ATR is, guys? Again, watch the video if you don't know about the ATR. The ATR, it tells you the average distance that the asset we're looking at, will travel in the time frame of the candle that's on the chart. So this is a 5-minute chart of the gold market, and the average true range, which is what ATR stands for down there. Can you see that down there? I don't think you can see that because let's just move that up. See, there we are. This says ATR 14. So what this does, it counts back 14 candles because it's 14. You can change the number if you want. Some people have it 10. I use it 10 something. And it tells you, it doesn't give you a trend, or it's not a trend indicator. It tells you the absolute distance that the price has moved over the average last 14 candles, and it captures the difference between the absolute price. So so currently here, let's just do this as an example. So for this candle here, at 8:15, the ATR was 2.13. So $2.13 was the average distance. $2.13 was the average distance the price has moved in each candle. Okay, whether it's up or down, it doesn't tell you that. It just tells you the distance it's moved. So what's happened? The reason I'm saying that is because that we've got in at 351.45, and our stop loss is currently at 355. So that's more than, isn't it? That's just shy of $4. So it's more than twice the ATR. The ATR when we actually entered. So this is why some people, and I use this as well on some of my other systems. I use the ATR, a multiple of the ATR to give me my target. So what many traders do is use the ATR. Let me just put that on there. As a way of calculating where their target should be. So when we triggered long here at 7 o'clock, the ATR, the average true range, the average movement was only $1.76. So 2 of that has already happened, hasn't it? So 2 1.76s, if my maths is correct, is what's that? It's $3.40. So $3.40 added to 351.45 would have already taken us out. If we'd set our target at 2 times the ATR, which again I say a lot of people do, we would have already closed out at this level, and we would have got out. All the risk would have disappeared because we rallied really quickly. We'd have been out by 7:20 and off to do something else for the rest of the day. As it is, we're not trading it that way. We're scrolling, and we're manually, because we're here live, we're manually moving our stop loss up. So as you can see, as I've been talking, the market's continued to move up. So I'm going to move my stop loss up now. Remember, we were here at 355, so we're locking in some more. Because this wick has gone down to test it, that's my next key level from a higher time frame, 357.18. So I just don't want to squeeze it too tightly at the moment. And again, I'm trusting why I've put that line on at that point. I'm not going away to investigate why that's there. It's probably from a higher time frame. Remember, the higher time frames are long. Remember, we showed that earlier. And that's now pushing to the next level that I've got marked on, which is 3.6. We had a big rejection of this yesterday. So I am now locking it up to the next level, 357.17. So from our ATR point of view, it's been a really good return, hasn't it? So 351.45. We are now locked in at 357.18. And I haven't got a calculator next to me. My mental maths isn't that good. If somebody is still here, still listening to the old man blithering on, if you want to do that maths, in fact, let's do it now. Let's just do it. So where did we say we were? I've got the calculator here. So let me bring in the calculator for you. Just want to move off my other screen. I just want to bring it in here to show you. Right, so remember what we were talking about. Let's move that over there. Can you see that over there? So that's where we got in, 351. So we do 351.45 minus where we are now. Our stop loss is now, where are we? What did we do? We locked it in here, didn't we? 357, an old man and modern two. You've got that all wrong, haven't you? Fool. Let's clear that off. Right, hang on. Let's do it the other way around. It's easier. So 351. Let's do 357.18 minus 351.45. So currently we are $5.67. So if we divide that by what our ATR was on our entry, which is 176, so divide that by 1.76. Obviously, I'm not taking in spread or anything. We're already 3.2 ATR. So again, that would have been a key target for many. You know, if they're using this 3 times the ATR is another valuable sort of set and forget. So that would have triggered long. My ATR is 176. 176 times 3 gives me 340. That's not right, does it? That's not 17. That's not times 3 at all. But anyway, sorry. Let's do that again. It's not clear. So the other way to do it is 1.76 times 3 is 528. So if we had 5.28 plus our entry, which is 351, 351.54 is 356.82. So where's 356.82? Well, it's below our current stop loss, isn't it? It's around about here, 356.82. So we've done 3 times the ATR. So are we getting greedy? Well, if I wanted to go off and do it and get my breakfast and get another nice cup of coffee and not worry about what's going on, obviously I've got my stop loss here, but we've hit this 360 level. It's still positive, but I might want to close out as well to run it. But why? Why close out when the trend is very much with you? So if you want to be really aggressive, you could move the stop loss up to the previous low of the current previous candle, which is that wick there. So we're locking a little bit more. Let's just do that for the sake of it. And it's right on the 5 period, the 9 period EMA as well. So we've had a great start to Wednesday, trading our gold market, even trading our DAX market. I'm going to wrap this up now, guys. So I've been here an hour, and you've all gone a bit quiet on me. So I'm not going to keep time myself to the upside. Okay, so there's not a great deal of news today. But gold is still long and we're open. We've locked in 3 times our ATR from what would have been our 7 o'clock. Obviously, we weren't here at 7 o'clock. 7:30 when we'd come in. We were here. We were still long at a vet. We have entered there at 7:35 with a big strong candle, and then certainly again there at just before the open at 7:40:55, as we said here on the 5-minute time frame for gold. So because we got in late, we've only got a little bit of that move up, but certainly that's the entry there as well as we got in as we were looking at it this morning, wasn't it? So we're still in the money there, but the original system, if we program that, would have been nothing happening here, a big short here because of the size of the candle, but closed out for a little loss because we'd have got short there, down, a big reversal there, so out for a small, in fact probably flat, but a little loss, but certainly a huge gain so far this morning on the gold market in the European Open. So hope that's made sense with you guys. We just used this crossing EMA strategy. We could have used others. Let's just use pivot point 1D. The Heikin Ashi candle. So that's that short there for gold. This is the hourly chart. That's right. It's not the same. That's the 5-minute time. Short here at 6 o'clock, and then again clear, strong, closing the short here, and long there at 6:50. This is even more positive. 6:55. No wick to the south. Strong candle. This one here. This one here, and then again that one there, because we've gone through the VWAP, broke it significantly, and then again here on that candle there. So there have been 3 entries out on here because we've broken the in fact it wasn't that one, it would have been this next one to here, added there. These are very, very positive Heikin Ashi candles here in this 7 o'clock time frame. So some significant buying for gold. We know these are significant because there's no wick to the south. They're big-bodied candles. They're consecutive, big green candles. And even if you were being a bit very strict for this hour, you would have got out here when the green went to red and then got back in here at 7:55, like we did with the moving average strategy. You could have got in if you've been a bit aggressive just because that's gone from red to green, but there's wicks in, so looks like there's congestion and indecision round about here as we've got wicks to the north and the south, but they're green positive. That's the first big positive in there, out there again, and then in again here, long. But you'd be wanting to just take the longs rather than the shorts. So we'd got long there, closed out here because it went to red, but certainly long significantly here. So again, gold traders, if you're trading this, in fact, let's just, so we've got long again there, and we remain long. I would have added here. This is how this strategy is, and I'll be fully loaded long gold currently. 360 would have been a target from down here, and we've hit that already. So if you're trading gold, you should be long this morning, or should have been long the last hour or so. And there we go. So hope that's been of some use, guys. Remember, we are theproptrade.com. 1 phase, 2 phase to get to your funded account. As I say every day, our standard challenge still remains the most popular. The express challenge is very, very popular as well. It's catching up. But invest. As not as I'm saying, invest as much as you can. It just by investing as much as you can, you get bigger equity. So it gives you the opportunity to take lots of things, and it gives you the opportunity to make mistakes. As long as you keep your risk small. That's what it's all about. This business, guys. Whatever you're trading, whether it's the gold market, whether it's the see what happened on the indexes, the ones we've been talking about as well. The DAX market, again, that's been rallying nicely long. FTSE was long, wasn't it? Oh, it's turned around quite significantly there. So we could have been closed out on our longs. So let's have a look at what that looks like on our standard system we were using. There we go. So we were long, but then got wiped out on that big down. So the phase, so we the pre-market high was here. We've then pushed a new opening high there. So remember, this is 5 minutes. So within 15 minutes, we've put a high of the day at 9,185, and then we've turned around really aggressive. We're back to where we were. So if our stop had been pulled up, which it probably would have been around here, it would have been close flat basically from here. So that would have taken us out as well. So again, you see the volatility of the open hasn't really helped us, but that's faded that rally. So what is of interest now going forward to the rest of the day and into the US Open is the high of the day that the FTSE, if you're trading the FTSE, here at 9184 is the high of the day so far, and that's been sold off quite aggressively, 12 points down. I mean, these are small moves, guys, remember, but we're trading these shorter time frames, so it exaggerates it. If we look at our real trading time frame, the hourly time frame, it's still relatively bullish. Lots of volatility pre-open and lots of volatility in this opening hour. So somebody said something that's moved the stock markets in Europe. I haven't got any news feeds from them at the moment. I'm just talking to you guys direct, so I'll go and find out what's caused that. And the DAX are the same, so something they were less volatile, the DAX down the hourly chart, but the 5 minute time frame we were looking at it's long, and that's come back and that's closed out, but it's still 50 is still holding. So the opening rally has been sold off, and again we got to a new high, 24,200's breach. So 24,209 is our high for the day on the DAX. If we come back and have a look at that later, our low of the day very much a long way away. Need 300 points at 24,070. So we've come back through the pre-market high, and we're back here. So we're still in that sort of pivot area here on this 5 minute time frame, but at opening, I'm sure we really very had much profit on that. Up, down, up, down. Depends how quickly we moved our stop loss to that high of the day, which we might have done here as we'd gone high. I think so we would have been out flat basically. I think if we'd got in here, or we'd got in earlier, we'd have made a few points on the DAX this morning. So there you go, my friends. DAX is rallied, now it's come back down here in the short term frame, but again, a calmer time frame. The hourly remains positive, the 4 hour remains positive, so we'll be looking for longs, that's what I was saying before, and the daily also marginally positive, but sort of holding the 50, holding the 24,000 level in these doldrums. That is August. Okay, so take care, my friends. I'll leave you with the gold chart up for the day and up on our 5 minute time frame. And there we are, profit taken at 3360 from our entry down here. So it's still long. Remember, our stop loss is here now, so we'll see what happens. Looks like that might be getting taken out if we close some of the. As I'd added to this, that would have been another potential addition there on that big candle at 8 to 360. I've taken some of the risk off, and you can see here for 5, 10, 15, 20 minutes we've stalled at 360 and we're going down. So my hard stop loss is there at 357.85. So we're still in the money automatically from the system triggering long, and also in the money from when we got long earlier as we came live this morning. So I'm going to wrap this up. It's 8 minutes past the hour. So take care, everyone. Have a great day. Do join us if you're not a member. Say the Pro account. Oh, interestingly, the Pro account's become our most popular. So obviously the data's changed. So let's go to the Pro account, $25,000 Pro account, 2-step challenge, 10% profit on the first leg, 5% on the second leg. Your refunded account gives you the ability to take 90% of the profit that you make in real crypto terms. $25,000 will cost you. If you're new to the proptrade.com, you get a 25% discount as a welcome discount. So less than $150 gives you a massive $25,000 equity that allows you to trade, some markets with perhaps some bigger spreads, some of the crosses that I put on my trading platform. I'll be updating that later today as well. There's lots and lots of trades open at the moment. I've got too many, probably around about 12, 15 trades open. So I'm reaching my risk targets. So I need to have a look at that as well. But $150 gets you $25,000 worth of equity to play with. It allows you to trade the news as well, trade the weekends anyway, and 90% profit share. We're very open, we're very honest, we're very transparent, very clear. Even the rules, terms, and conditions here are all very, very clear. We don't like you gambling. We don't want you risking more than 3% on any one particular trade idea. But come and join us. There's lots and lots of traders now taking real cash out on a Friday. We pay every Friday. You get your you get your payment refunded on the second payment of your funded account. It used to be the third. Then we brought it to the first. Now we've sort of split the difference, and it's on the second funded account. And lots of our clients are taking money out on a regular basis. So give it a go. If you've already used us once, there's another option. There's a smaller discount, obviously. So Discord 20. As long as you're on our Discord group, which is where all the chat, all of the information, where you're asking. And the support guys who are absolutely, I can't sing the praises enough of the support team. They're absolutely on the ball, Christian, of supporting you. So Thompson is one of the support guys. Johnson is another one, really, really on the ball. And Katzen, the prop trade, another member of the support team, very much on the ball about getting your answers to your questions. So, for instance, Think Faster. Does prop trade have demo accounts? Yes, said Johnson. How can I get them? I don't find it on the website. Well, Think Fast. You're obviously not here, but just go to the website. The demos are there, and I'm sure Johnson's going to ask you directly to that question in a minute. That was at 38. It's now 41. It's 3 minutes. It's another. He took 2 minutes to answer him the first time. I'm sure he'll be in there in a minute. He might have gone to get his coffee as well. Right, I need to go and get some more coffee because that first cup isn't enough. So let's have a look at our gold trade. It's still open. Our stop loss is 358. And thanks very much for your time this morning. Do come and join us. Trading is a mindset. Success in trading is a mindset. Manage your emotions. Don't get too greedy. Don't get too scared. And anybody, wherever you are in the world, guys, can make a success of this. Okay? All the very best. I'll see you tomorrow for USPPI. In the meantime, have a great day. Stay safe. And may the pips be with you all. All the best. Bye-bye.